markets are officially open for trade. Joining me now is Eric Criscolo. He is the market strategist for the New York Stock Exchange. Eric, welcome.
Thanks, Ashley. Great to be here.
Great to have you back. So the session just kicked off. What are you going to be looking at most closely today?
Yeah, well, obviously earnings season is still continuing, so we're still getting the flood of earnings coming through. Some of the bigger healthcare names are reporting right now, so that's going to put focus on that sector. But, you know, to be honest, there's also still a lot going on in the commodity sector. Metals, you know, gold and silver especially, showing just extreme volatility. So we're kind of keeping an eye on that as well.
What are some of the themes that are coming out of this earnings, Q4 earnings season?
I think the results are generally, you know, they're positive across the board. You know, so companies are generally beating estimates. The one thing we're seeing, though, is that companies aren't getting as rewarded or even rewarded at all for beating estimates. And companies that miss estimates are getting punished a lot more than they used to, historically speaking. So, you know, that's kind of a dynamic of, you know, expectations have gotten really high, and also, you know, the valuations and the price levels have gotten really high. So any type of even slowing momentum is kind of getting a knee-jerk sell-off in that particular name.
All right, and yesterday the BLS said that the January jobs report is not going to come out on Friday due to the partial government shutdown. How are traders gauging the economy given the recent delays in jobs data?
Yeah, I think we're still trying to get over the last delay, right? So that's, you know, now we have another delay to get over. So we'll see when these reports actually come out. I know Congress is voting on it today, hopefully to reopen everything. But, you know, traders are now accustomed to these things. The reports have been messy. The economic data has been messy, you know, coming out of that shutdown. Things were finally normalizing. But in general, you know, the economy, the prints have been solid. The latest yesterday was the ISM manufacturing index, printed a pretty good number. So, you know, on the headline numbers, the economy seems to be doing particularly well.
All right, and the ADP is going to be releasing private payrolls data Wednesday. Do you think people are going to be taking a close look at that?
Yeah, I think so. I mean, the payrolls data, labor data, always a big focus for the markets in general, especially now as you have potentially a new Fed chairman coming in, who still has to go through the nomination process. But, you know, he's historically, as you know, his one of his planks was he wanted to lower short-term interest rates, cutting. So, you know, how that whole Fed dynamic plays out now, definitely going to be something that markets are going to be paying attention to.
What is your take on Kevin Warsh?
I am not an economist, so I just want to put that out there right now. But, you know, it seems that, you know, again, he's previously talked about two things: cutting interest rates on the short end, getting them as low as possible, but also shrinking the size of the Fed balance sheet. And so those two things kind of are diametrically opposed in some points, as far as loosening and tightening financial conditions. So, you know, how that plays out if they do cut short-term rates, like Trump has been banging the table on, if they do that, a lot of times that could maybe pressure long-end rates to go higher, which is something that the economy might not want to do. And then shrinking the balance sheet, of course, that plays into the whole, you know, buying and selling pressure of treasuries, which will kind of, you know, percolate down to basically everything else in the economy. So it's really kind of, we don't really know quite yet what's going to be happening here. And of course, he still has to wrangle with 12 other FOMC members, right? So it's not just him voting; it's everyone voting together, and then they doing what the vote, you know, comes out as. So a lot of dynamics to play out still, but it should be interesting to see how that whole narrative evolves.
All right, and the S&P 500 hit 7,000 last week. Do you think we're going to continue to go in that direction? What's your take for the S&P long term?
I think there's certainly possibilities, absolutely, that good arguments, I should say, where the S&P could go higher. But we are starting to see, you know, a divergence in some of the sectors that were leading last year. Mega cap tech, those are kind of slowing down now. Other sectors like the Russell 2000, the smaller caps, they're kind of playing catch up. They're doing pretty well in the first parts of the year. You know, you need a lot more of those smaller names to do a lot better to make up for the fact that the top 7, 10, 100 names, if they flatline. So it's going to be harder for the gains to come by. I'm not saying we don't get it, but I just think the bar, again, as we're seeing with earnings, it's been raised a lot. So pushing into the higher levels for the S&P 500, it's going to be a little more difficult maybe than last year.
All right. Is there anything under the radar you're following you think we might be hearing about in 2026?
I think, this is not under the radar, but just the dynamics in the crypto market, really interesting. It's kind of falling off a lot right now, well off the highs. 120,000 Bitcoin was at several months ago. Now it's about 80,000. So that's a big risk asset. So it's a big sentiment asset. Things are going great. Everyone wants to buy crypto. Yay. That's really collapsing now. So how that market plays into the other markets, where that money, if it comes out of that market, well, where does it go into? Does it get really conservative and go into, overnight, money market rates, which I doubt, but, or does it go into some of the more speculative stock, areas like, space companies or data center providers or things like that, AI companies. So where that kind of speculative flow moves, really kind of interesting to track.
All right, Eric Criscolo, market strategist for the New York Stock Exchange. Thank you so much for joining us.
Pleasure to be here. Thank you.